All right, welcome back to the deep dive. Big news this week. We're switching things up a bit, going to a weekly format.
Oh, wow.
Yep, that's right. More deep dives, more insights, more crypto goodness coming at you every single week.
Love it.
So buckle up, because this week has been wild. We've got a market that's holding strong, even with some ups and downs in trading volume. Tether's diving headfirst into the sports world. Ethereum development is going into overdrive. And oh yeah, we've got a fresh batch of Memecoin mayhem.
Sounds like we've got a lot to cover. This is a really exciting time for the crypto world. We're seeing this incredible convergence of traditional institutions with cutting-edge tech and a growing cultural impact. It's really shaping the future of finance right before our eyes.
I totally agree. It feels like we're on the verge of something huge. But let's break it down piece by piece. Let's start with the big picture, the overall market. We're looking at a global crypto market cap of over $3.2 trillion. We saw a little jump, almost 2%, in the last 24 hours, but trading volume took a dip about 21% down. So what do you think? Is this a healthy pause? Like the market catching its breath or something else?
That's the big question, isn't it? On the one hand, a dip in trading volume can sometimes mean there's a bit of uncertainty in the air, but it could also mean that the folks who are in it for the long haul are feeling pretty confident, so there's less of that frantic buying and selling going on.
Right, like everyone's just chilling and holding.
Yeah, exactly. Maybe the market just needs a moment to regroup before it makes its next big move.
Makes sense. Okay, so Bitcoin had some solid growth this week, up about 1.4%, but Ethereum really stole the show. We're talking almost a 4% jump. What's driving all that ETH momentum? Is it all the buzz about Vitalik Buterin's proposal to increase the gas limit, or is there more to the story?
Well, the gas limit proposal is definitely creating a lot of excitement, but there's a lot more going on behind the scenes with ETH. Don't forget, Ethereum is still in the process of transitioning to a proof-of-stake system. That upgrade to Ethereum 2.0 is a really big deal.
Right.
It tackles some of the major challenges that have been holding Ethereum back, things like scalability, security, even energy consumption. That's music to the ears of both developers and investors. And let's not forget about the whole DeFi ecosystem that's flourishing on Ethereum. That's attracting tons of attention and investment.
It's like everyone's finally realizing that Ethereum isn't just a cryptocurrency. It's a whole platform for innovation.
Yeah. Spot on.
Okay, let's step away from the technical stuff for a minute and look at some of the most interesting movers and shakers in the market this week. The wild rides, the surprise surges, the ones that make you go, huh, what's going on there?
Always fun to see.
First up, we have a token that's been impossible to ignore, the official Trump token, ticker symbol Trump. It's up over 30%, sitting pretty at 21.37. So what do you think? Pure political speculation, or is there something more fundamental at play?
Well, you have to remember that politically themed assets are always going to be volatile. They react strongly to whatever's happening in the news and how the public is feeling.
Yeah.
It's a roller coaster, and we have to be really careful with these types of assets because they're super susceptible to manipulation.
So tread lightly, right?
Yeah.
Especially when it's something tied to such a, shall we say, divisive figure.
Exactly. Always separate the hype from the fundamentals. Before you make any decisions, take a good hard look at the risks involved. High rewards often come with high risks, and it's important to remember that.
Words of wisdom. Okay, let's move on to some gainers that are maybe a little less influenced by Twitter trends. We've got Jupiter, ticker symbol JUP, up over 17% this week, and Jito, ticker symbol JTO, right behind it, climbing almost 15%. Both of them are making some serious waves within the Solana ecosystem. What's behind their success?
Well, Jupiter is quickly becoming the go-to platform for DAX aggregation on Solana.
DX aggregation.
Yeah, decentralized exchange aggregation. Basically, it pulls together the best prices from all the different decentralized exchanges and puts them all in one place. Users love how simple and efficient it is. As for Jito, it's gaining a lot of attention because of the role it plays in boosting MEV strategies on Solana.
Okay, hold on. Let's back up for a second. I know we have some listeners who might not be familiar with all the lingo. Can you give us a quick explanation of what MEV is?
MEV stands for miner extractable value. It basically refers to the profit that miners or validators can make by strategically ordering or including transactions in a block. Jito helps users squeeze the most out of those strategies. And trust me, that can be pretty lucrative if you know what you're doing.
So while everyone's busy watching the Trump token grab headlines, JUP and JT are quietly building utility and gaining traction within the Solana ecosystem. It's a good reminder that there's always more happening beneath the surface.
Right. There's always more to the story.
Exactly. And now, to be fair, Let's talk about the not-so-lucky tokens this week, the ones on the downside. We've got Matra, ticker symbol OM, down almost 4%, BNB slipping about 2.6%, and Tron down just over 1%. What's going on there?
Hmm. It's tough to pinpoint any specific reasons for those dips without a deeper dive into each project. But, market corrections are a natural part of things. And then, of course, you've got all those project-specific news and broader trends that can come into play.
Yeah, like ripple effects.
Exactly. For instance, BNB might be experiencing a little profit-taking after a recent surge, while Tron might be navigating some ongoing regulatory challenges. There's always a whole web of factors at work.
Let's change gears for a minute and talk about something that really caught my eye this week. Tether's investment in Juventus Football Club. This isn't just your run-of-the-mill sponsorship deal. This is a stablecoin giant teaming up with a legendary soccer team. What kind of message do you think this sends?
It's a major milestone. We're talking about the integration of digital assets into the world of sports and entertainment. Tether's move could spark a whole wave of crypto adoption across the industry. Think ticketing, merchandise, fan engagement. Imagine buying game tickets with Tether.
Wow, that's wild. It's like crypto saying, hey, we're not just some abstract financial concept. We're here to play too.
Exactly. It's a statement. And this could have huge ripple effects, changing how traditional sports organizations view and interact with cryptocurrencies. We're already seeing more crypto companies diving into the sports world, realizing the massive potential of its global reach and passionate fan base.
So we've covered market movements, Ethereum upgrades, and crypto breaking into the sports world. Where do we go from here? What else is on the agenda for this deep dive?
Well, we can't forget about the good old meme coin mania, can we? It's like every week there's a new meme coin grabbing headlines. And this week's inspiration comes from an unexpected source. CZ's dog, Broccoli.
Ah, yes. The internet went crazy for CZ's furry friend. And of course, the crypto community couldn't resist turning it into a meme coin frenzy. So, what do you think of all this? Are meme coins just harmless fun and hype? Or is there something more to them?
Well, they might seem like internet jokes fueled by pure speculation, but their popularity actually tells us something really interesting about the crypto space.
Like what?
It shows how accessible and inclusive it is. Anyone can create or invest in a meme coin, even if they only have a small amount of money. It's a super low barrier to entry, and that's attracting a whole new wave of people to the crypto world.
So are you saying meme coins could actually be like a gateway drug to the wider crypto world?
In a way, yes. For a lot of people, meme coins are their first experience with cryptocurrency. It might start as a joke, but then they get curious, and it leads them down the rabbit hole of blockchain technology and decentralized finance. But of course, you always have to be careful. Meme coins are super volatile and speculative. Most of them don't have any real utility or long-term value.
Right, it's all fun and games until someone loses their life savings on a meme coin based on a CEO's pet. Speaking of meme coin-like surges, Hyperliquid's HYPE token jumped a whopping 176%. Is this a sign that altcoin season is upon us, or should investors be cautious?
That's the million-dollar question. It's one that has a lot of analysts scratching their heads. While seeing a sudden surge in an altcoin is definitely exciting, it doesn't necessarily mean the whole market's about to take off. We need to look at the bigger picture, the overall market conditions, trading volumes, and what's specifically driving each token's price.
So basically, don't get swept up in the hype without doing your research.
Absolutely. Making informed decisions is critical in this space, especially when you're dealing with volatile assets like meme coins and altcoins.
Okay, listeners, you heard it here first. Meme coins and sudden altcoin surges can be tempting, but remember to DYOR, do your own research. Now let's shift back to Ethereum and talk about a potentially game-changing proposal, Vitalik Buterin's call to increase the gas limit.
This proposal is addressing a pretty major challenge on the Ethereum network. The gas limit basically determines how much computational effort is allowed in each block. And what that does is it limits how many transactions can be processed at a time. So increasing it would allow more transactions per block, and that could potentially boost the network's efficiency and scalability.
So it's kind of like widening a highway to handle more traffic. More cars can get through, but there's always a trade-off. What are the pros and cons of increasing Ethereum's gas limit?
Well, people who are in favor of it argue that a higher gas limit is essential for Ethereum to keep up with the increasing demand for decentralized applications. It could also help to prevent network congestion and make Ethereum more competitive against other blockchains that are bragging about their higher transaction throughput.
That makes sense. But what about the other side of the argument? What are the concerns?
Some people are worried that increasing the gas limit could lead to more centralization. A higher limit would require more powerful and expensive hardware to run a node, and that could potentially make it harder for smaller players to contribute to the network's security and decentralization.
So it's a classic balancing act between efficiency and decentralization.
Exactly.
What's the overall feeling in the Ethereum community? Are people generally for or against it?
It's still a pretty hot topic of debate. There's no clear consensus yet. The developers are being very careful and considering all the angles, both the benefits and the risks, before they make any decisions.
That shows that even the most fundamental aspects of blockchain technology are constantly being discussed, debated, and refined.
It's a living, breathing thing.
Right. And speaking of evolution, there's another development in the Ethereum world that we need to touch on. The decision to speed up hard fork deployments.
Oh, yeah. That's big.
What does this mean for the future of Ethereum?
Well, it shows that the Ethereum developers are really committed to speeding up the implementation of upgrades and improvements to the network.
So what exactly are these hard forks?
Think of them like software updates. They introduce new features or address any existing issues. By speeding up how quickly these hard forks are deployed, the Ethereum community is aiming to tackle challenges head-on and keep Ethereum at the cutting edge of blockchain innovation.
Sounds like they're really stepping on the gas with Ethereum's development roadmap.
Exactly. This faster pace could mean that features like sharding, which would drastically improve Ethereum's scalability, could be adopted much more quickly. It brings us closer to the full realization of Ethereum 2.0. And that, my friend, is a potential game changer for the entire crypto ecosystem.
I'll definitely be keeping a close eye on that. Now let's switch gears again and talk about the competition that's heating up in the world of Layer 1 blockchains.
Bring on the heat.
We've got news that BNB Chain has overtaken Solana in fees. What does this tell us about the race for blockchain dominance?
This is a really interesting development, and it highlights just how dynamic the blockchain landscape is. BNB Chain's rise to the top is being fueled by a combination of factors. You've got the lower transaction fees, a rapidly growing ecosystem of decentralized applications, and strong support from Binance, which is, of course, a major player in the crypto world.
So it's a perfect storm of affordability, a thriving ecosystem, and the backing of a heavyweight. But what about Solana? Why is it falling behind in the fee department?
Solana has been hitting some roadblocks lately, including network outages and concerns about centralization.
Oh, right.
These issues have led some developers and users to explore other options, and BNB Chain is looking like a strong contender.
It's a reminder that even the most promising projects can stumble, and the competition is fierce.
Absolutely. The battle for Layer 1 dominance is far from over, and I think we can expect to see more surprises and shakeups as new players emerge and the existing platforms continue to evolve. It's a blockchain showdown.
We've got front row seats to all the action. Okay, now let's talk about some news that's a little more on the ambiguous side. Coinbase CEO Brian Armstrong has been making some bold predictions about crypto's economic impact by 2030. He believes that 10% of global GDP could be running on blockchain by then.
Wow.
That's a pretty huge statement. Do you think he's being overly optimistic, or is this a real possibility?
It's definitely a bold prediction, but when you think about the rapid pace of blockchain innovation and its potential to disrupt so many industries, it's not completely out of the realm of possibility. We're talking about applications in finance, supply chain management, healthcare, government services. The possibilities are practically endless.
So it's not entirely out there.
Not at all. But here's the key. We need continued development of scalable, user-friendly blockchain solutions. And just as importantly, we need widespread adoption by both businesses and individuals.
Right, it all comes down to building the infrastructure and showing people how it can be used in the real world.
Exactly.
Speaking of blurring the lines between traditional finance and crypto, there's news that GameStop is considering investing in Bitcoin.
Now that was a surprise.
Right, GameStop, the poster child of the meme stock frenzy, exploring Bitcoin. It's a pretty interesting turn of events.
Talk about a full circle moment from meme stocks to meme coins to Bitcoin.
It's like the meme stock saga is entering a new chapter. So what's your take on GameStop's potential Bitcoin move?
Well, I think it shows the growing interest in crypto assets from companies that are outside the traditional tech world.
Interesting.
More and more companies are starting to recognize the potential of blockchain technology and digital currencies, and they're looking for ways to integrate them into their operations.
So it's not just the big tech giants anymore.
Nope. Mainstream companies are starting to see the value in crypto too.
I love to see it. Okay, so we've covered a lot of ground in this deep dive: market trends, Ethereum upgrades, meme coin mania, Tether's big sports play, regulatory developments, and even GameStop's flirtation with Bitcoin.
Phew, my head's spinning. It's been a busy week in the crypto world, that's for sure.
So as we wrap up this deep dive, I want to leave our listeners with a challenge.
I like it.
Think critically about the crypto news you're reading and hearing. Have those tough conversations about the future of crypto, and never stop exploring the possibilities of this incredible technology. The future of crypto is in our hands.
Couldn't have said it better myself.
And that brings us to the end of this week's deep dive. Thanks for joining us on this journey through the ever-evolving world of crypto.
Always a pleasure diving deep with you.
Don't forget to subscribe to The Deep Dive for more weekly explorations of all things crypto. Until next time, stay curious, stay informed, and keep on diving.